Patrick Duffy, welcome to the show, my man.
Hey Juan, thanks for having me, man. I appreciate you setting it up.
Hey, it's a great pleasure to have you here with me today, and you have great experience in a multifamily space. So I would like to share your experiences with the audience and kind of take it from there. So where are you calling us from?
I'm in beautiful, sunny Tustin, California, out here in
Beautiful.
North.
That is beautiful. That's nice, man. That's awesome.
Yeah.
So yeah, tell me a little bit about your background and why multifamily. Why are you doing what you're doing currently, and kind of take us from there.
Sure. Yeah. So I started my career in 2013 in a real estate capital markets group at a bank in Southern California here. We were focused on providing CMBS debt and bridge financing and portfolio financing for multifamily, office, retail, industrial, and generally commercial real estate operators. And so I came from a background of strong underwriting and understanding how to structure deals on the debt side, but I really didn't have any perspective as to what was going on the equity side of the transaction and the principal side of the transaction. And so after a couple roles in that skill set, I was slowly transitioning more to a sales-focused career because I wanted to be on the sales side of things and earn commissions like my buddies and really start to do that. But as I mentioned to you before, I found out that sales and maybe consumer-focused sales was not really what I was meant to do. And so during that time, it really caused me to really deeply analyze, okay, this isn't a fit for me, but I love multifamily. My folks own multifamily. I've wanted to do it for a long time. I just didn't have the capital with which to do so. And so I started reaching out to people that I had lent to and kind of got their perspective on how to get started. And during that journey, came across some resources that would enable me to partner with people. If I brought a transaction that met their return requirements, they would actually syndicate and raise the equity, which was fantastic for me to learn. So that's how I made the transition from a corporate banking job to being a principal in a multifamily transaction. And that occurred in the later half of 2016. And then 2017, I started doing it full time.
Awesome. So I love your story, by the way, but why do you think most, there's a lot of guys out there that have your experience, right? And they're not taking the same action that you're doing, right? They're still stuck in their positions, which is great, right? But they're not necessarily building wealth. And we all know that, multifamily is a great wealth builder. If you invest right and you invest it at the this timing is everything and getting the right deals, everything. But there's so many different ways where you can, we can proceed and actually, take it to the next level if you actually invest. And so what do you think it is that, a lot of these guys, like your current position or your previous position, stay there? What do you think the reasoning behind that is?
Well, in my personal experience, I just wanted to do this so badly that I was willing to just do what it took. I mean, I know that sounds cliche, but the fact is that I really didn't like working a corporate job anymore. I hated it. I was willing basically to do anything that I could in order to remove myself from that environment. I just felt like I had more to offer than what was going to be fundamentally judged by the people that were employing me. And I just couldn't take working in that environment anymore. And so I was willing literally to do anything that I could to get myself out of that. So I think that was the burning desire, so to speak, to cause me to take the actions that I did. But it's different for everyone. I think people just have to reach that point where they're desperate, effectively, which is what I was, to take the action in order to change. And I kind of have some unique circumstances in that I'm not married. I don't have children. So I don't have some of these structural things that are keeping me comfortable and locked into a position, so I can take some of those risks. But I understand that for some folks, it is going to be a little bit harder to make that jump because they are somewhat comfortable with where they're at, and they have obligations. So I understand that was a little bit unique and maybe what informed my kind of progress as opposed to the next guy. or gal. But yeah, that's really what it took for me. I just had such a burning desire to change my circumstance in life that the actions necessary to do so were not difficult for me to grab onto.
Got it. So prior to you making the jump, did you have any real estate experience at all? Like
Well, I
on
had
your
real estate
investment side?
experience.
Yeah.
No, not on the investment side. Not on the investment side. I think as close as I got to being on the investment side is my folks own a 12-unit property that my grandfather built in LA. And just growing up with that and seeing the management of that and kind of being a party to the management of that and pouring over the financial statements and things of that nature. That's my only exposure to the investment side of real estate. But before and beyond that, I had none before I started.
Got it. Okay. So that was basically your aha moment, basically, to realize that, you were getting desperate and you had to make a change. And so who was the person that you actually went to go reach out to, or how did you actually make that mindset shift? And it's like, I have to actually go talk to this person to be able to proceed with my next step.
So I like I mentioned, I initially reached out to people that I had lent money to get their perspective on how they started or how they would go about doing this, or if it was even possible, because I was kind of coming from the standpoint of, hey, I don't have any equity of my own to take down some of these deals. So what are some creative ways in which I can structure these? And so a lot of our initial conversations really centered around that topic specifically. It's how do I even get into the game if I don't even have any money of my own to contribute? Because I felt like that was a real limiting factor for me, and that was a limiting belief that I had, that without any money I can't do this, or without any creative financing I can't do this. And so they not only told me it was possible, but it was possible to do it without any money by bringing in the right partners to the transaction to get me past that step. And so after those discussions, it was really great. And then ultimately, what caught my eye was Michael Blanc, his program that he had kind of just started rolling out in terms of a partnership program where if you found a transaction that met his return requirements, he would syndicate the equity. And that was the big aha moment for me, finding that I really didn't know what I had stumbled upon or the power of it until we actually got started, because it was a godsend for someone like me that had drive and some know-how and knew how to find deals, to be able to have a realistic chance of partnering with someone that could raise the equity. That was huge.
Got it. So where was this first deal? Like, how did you find it? Who'd you, reach out to as far as the brokers, or how was it that you were able to transition into your first property?
Sure. So I guess it started first with market selection. So I started, talking to those folks initially that I mentioned, previous customers, about how do you determine what market you want to be in, and what do you look for? What are some of the dynamics or economic data that you would pinpoint as, this is a good market indicator? And so they gave me some ideas, and I had kind of toiled around on Loopnet for years. I was familiar with it. I knew how to use it. I wasn't a stranger to it. And I would look oftentimes and do kind of back of the envelope calculations as to, it would be great to have this property. So I was already familiar with the ad interface. And I started, frankly, just looking where cap rates were greatest. And then tried to kind of funnel in down from there. And I got some good indicators on, where the deals were, what markets seemed to have a lot of product. And that's where I started funneling down into my market. And then in terms of the actual then deal materializing from that, I started reaching out to the brokers in that market that seemed to have the majority of the listings, really getting a sense of what the market was like, since, these were all out of state for me. Since I'm in Southern California, I wasn't going to be focusing on SoCal. These were all states or markets that I had never been to. So I wanted to get a sense from them as to where the opportunity was or what the dynamic was in those markets. And I felt like after I got enough color from those brokers, then I was able to really take a stab at, making a charge at some of these properties. And so there was one property, it was the first deal that we did. It was a 64 unit property that I had seen marketed on Loopnet, and then it had gone away, and my focus had shifted. And then in mid to late December, I noticed that it was back on the market, and it kind of just caught my eye because it was a great looking property, had a high cap rate. It was low in terms of cost per unit, and the occupancy was high. I mean, it just looked really good, and it just caught my eye as to why, this deal was on the market. And so I reached out to the broker. I got the financials. I underwrote it within the underwriting tool that I got from Michael, and it seemed to check the boxes. And in hindsight, I think I got a little lucky in that my underwriting was just good enough, and the deal is a very good deal. It was mispriced, so it was fortunate that I was able to transact on it. But I basically just threw a number out at the broker. What do you think your client would go for this? And I got a verbal, agreement on the offer, and then the process really started cranking up from there. So it was, I'd love to tell people that, I was very detailed and very scientific and specific about how I got into my first deal. But the fact, I look back on it now, and it was just, it was right place, right time, and just by taking some action, I was able to get the attention. But there was definitely luck involved for sure. So
yes, and I love that you were able to find this deal on Loopnet, because I know it's been known that Loopnet is the place where deals go to die, and you can't ever find anything on Loopnet. And no matter what you do, these are deals that the guys that do know what they're looking for just kind of throw it to the side because this is nothing. It's not a good deal at all. So I love that you're able to
that's go ahead. Sorry.
No, I was saying I love that you're able to find a deal on Loopnet, and when most guys will just make the excuse that those deals on Loopnet are just trash.
And you said the right term. It's an excuse because me and my partners, we purchased just over 500 units in 2017 and had about 1,200 units under contract at one point, or collectively, and all of those deals were on LoopNet. So it is a total excuse that no good deals are on LoopNet.
Okay, awesome. So you mentioned Memphis, right? What other markets are you looking at that you feel like are good that maybe other guys can also maybe take a stab at?
So I generally love the Southeast. I think the Southeast, if you look at migratory patterns and just some of the job growth going on in the Southeast, it's really compelling. I really like, even though I haven't made it very far with many transactions in Florida. I'd love to be in Florida, and the Carolinas I really like. Alabama, I really like, specifically Huntsville. I think I was a little late, frankly, to Huntsville, just in that I haven't been able, or nothing's really caught my eye in the Huntsville MSA lately that I'd love to take a run at, but I think there's a lot of compelling job growth going on there. And so collectively, I don't have one specific market that I'd say guys, go and zero in on. I just say kind of generally the Southeast is where I think there's a lot of opportunity.
Got it. The Southeast. And so what are you looking for specifically, like in these Southeast markets? What are you looking for? Is it job growth? Is it population growth? I mean, what key factors are you looking for?
I'd say both job growth and population growth. The rule of thumb that I've heard, and frankly, I probably need to spend a little bit more time on my macro education, but I've heard the terms, 2% population and economic, or population and job growth for the consecutive last 2 years is typically what you want to see in a market before you dive into it. That seems to be a good indicator of a market strength, or that it's coming up. Anything less may be perceived as somewhat anemic or a slowdown. So I think those tend to be kind of the economic indicators that you want to look for. But I'd say in terms of deal, and this may be a little bit non-traditional, but based on my experience lately with some of the deals that we purchased in later 2017, what I'm looking for right now on a deal basis is obviously, everyone throws out the term value add, but I like to use the term mismanaged. And so if there is a clear case as to why a previous owner has mismanaged that property for N number of reasons, those are the properties that I like to target with somewhat of a story. The market clearly supports something better, but for whatever reason, this owner is really struggling or unable to manage it effectively. And I feel like unless it's a Armageddon type scenario, those deals can be somewhat market independent. because if the market supports something better and that deal is just fundamentally mismanaged, then there's definitely a case for adding value. It may not be the hyper sexy growth that you'll see in a DFW or some other MSA, but the case still can be made that there's value to be created and your investors will benefit. So that's kind of what I look for.
Excellent. So how are you able to build your team? Entering a new market, that can be a little bit of challenging to get into it. So how are you able to build your team from the ground up without having anybody there, like boots on the ground?
It was a struggle. It was a struggle, and it's going to be a struggle for anyone, I think, starting out in a market where they're looking, but I think it's absolutely vital. And, I mentioned earlier that first deal was, I kind of just stumbled my way through it with the guidance of Michael and our partners kind of coaching me along the way. But if I were to do it over, I definitely would focus on the team building as opposed to going straight to the deal, which can be, it's natural for anyone. They're going to start on Loopnet. They're going to start looking at deals, get excited about a deal, and then the teamwork is going to come kind of secondary because it's not really the sexy part of it. It's the kind of the grunt work and the footwork. But I think it's fundamental because you gotta get pro formas from these people. You have to get market intelligence from these people. Understand what things are going to cost as part of your business plan when you analyze a deal. And it's really going to help you narrow your focus when evaluating deals. Because suddenly, once you get some of that market intelligence from your team on the ground, some deals are just not going to look that good anymore. And so case in point, the one team member that I'd suggest immediately is a property manager. I would start talking to folks in that market about who they recommend in terms of a property manager, because they are going to be so vital in terms of telling you if your rents are off, if your expenses are off, what it truly takes to renovate a unit and what you can expect post-renovation. That is a critical team member. The other service type team members like inspectors, attorneys, things of that nature, those I think can come secondary or flow out from the property manager, but your property manager is going to be number one for sure. In terms of the first deal I did, it's funny. I kind of did a Google search and I just called the first person that came up in that market, and they turned out to really, I had a couple phone calls with them, and then it was obvious that they weren't going to be a good fit. But had I maybe talked to some multifamily folks in that market, and brokers are a good person to start out with in talking about who would you recommend as property management, I would have got a lot farther quicker. And so when we were there in Memphis doing our on-site due diligence, we had 4 interviews on the first day with different property managers when, it didn't need to be that chaotic. We could have done some groundwork before we actually stepped on the ground. But unfortunately, it was just kind of the way that things happened and we got through it. But looking back, I would have spent some time on the property management first before I actually started going out and looking at deals.
Got it. So what you're saying is one of the first things you should do, besides looking at the property, is actually engage a property manager, and the best way to do that is to actually get a source through the broker that you're actually getting the deal from. Is that correct?
Absolutely, yeah. So the property managers that we work with right now in Memphis, we have 2. They have a different specialty, and that's why we have chosen 2. But they both came from broker referrals. So we just simply ask the question, and anyone listening can just simply ask the question to brokers in their market: who are your clients having success with? What property managers would you recommend based on your clients' preferences? And so that's how we got the referrals to both the property managers we're using now.
Got it. So as far as underwriting and the lending side, how are you underwriting these properties as far as your term? How are you doing it? Most guys, you should be more conservative whenever you're doing your underwriting. So what kind of terms are you using? Are you underwriting to like a 10-year term? Because I hear that most guys will tend to do that instead of underwriting to like a 5-year hold. So what is your strategy for that?
Well, the underwriting, it's the underwriting is the underwriting, and the underwriting has to comprise what is true in the market, and that stems from what can be achieved within the market in terms of rents, what are verified expenses within that market per door, really having that very specific insight which will come from your property management. That is going to drive a lot of your underwriting. And the mistakes that I've seen some folks make is some folks, and it's a very easy back of the envelope calculation to do, and I do it myself when just kind of ballparking deals, is they focus on a percentage of gross revenue in terms of their underwriting, but really it comes down to expenses per door and expenses per certain item. And those expenses may oscillate between a 100-unit plus building and a 50-unit building. There's just different expenses per door. And so getting that type of granular insight is critical to actually evaluating a deal. But in terms of your question with regard to the debt and underwriting the debt structure, that's going to be very specific to the deal type. So if it's very heavy value add, you're going to have to incorporate underwriting based on the bridge financing that you're going to have to get on that property, because you're not going to get non-recourse fixed rate loans from Freddie and Fannie on those types of assets. You're going to get a higher interest rate, typically interest only bridge debt. That is going to be some percentage of your total cost, including your renovation budget, and you're going to have to incorporate that with your underwriting. So it's a little bit more nuanced. But in terms of you asked about the hold period, that's investor specific. So there have been deals that we had under contract and we thought were really great for a certain class of investor that had different goals. There are some investors that are interested in very significant value creation as part of their investment, and that may necessitate a lower hold period or a smaller hold period because the value is going to be created really rapidly and then you dispose of that asset. There are other investors that really enjoy the steady cash flow and kind of a high coupon on their investment that are just looking to take advantage of depreciation and cash flow throughout the term of their investment. So that's going to be deal specific, and you have to be mindful of your capital partners on the equity side as to what they want, because that's really going to inform the type of transaction that you pursue. So hope that answers the question.
Yeah, no, that's a great detailed answer. You basically have to find out what kind of investors you're going to be dealing with to like that. You know what kind of deal you're going to be going after, right? And so whether it's going to be a more detailed and more heavily involved asset where you're going to be doing a lot of work and getting a bridge loan in it, or it's going to be more of a traditional, just an agency type of debt, where you go straight into it and it's a little bit more yield play. So
yeah.
You got to find out what the actual business plan is, and then kind of take it from there.
That's right. And I mean, it's based on the principal or the syndicator's network. Their investors or people they talk to are all going to have a different desire for their capital, or a different risk appetite, I should say. And so it's kind of chicken and egg. But really, the way I look at it is, if your capital only wants one type of transaction, then you got to bring them that transaction. There's no two ways about it. You may want to do Class A, great, just beautiful asset, but there's no cash flow there. But your investors actually want to make something in terms of a return. And so you have to satisfy their demands, or you're just not going to do a deal.
Got it. So what kind of advice would you give to those other investors that are also looking to get started, that maybe have a similar background, similar to yours? What do you think they should do if they have any interest in investing in multifamily?
Well, I think they need to make a decision as to where they're coming from and what they want to do. So, before we started, we were kind of talking about the different tracks that are available to people in getting into multifamily. And you can be, passive and invest in people's syndications, or you can be an active and actually lead a transaction. What I will say is that leading a transaction is a lot of work. It takes a lot of work to do, not only in closing the transaction, but the ongoing management of the business plan. It's a lot of hours, and it takes a lot of work. And so if you have capital available to you and you would rather simply invest in a syndication than really take on the time burden that it is to go out there and lead a syndication, then I would really try to make that distinction at first. Now, for me, like I mentioned, I didn't have any equity of my own to speak of to be able to do a transaction myself or really invest in someone's syndication. I wanted to go out and be a lead on a deal. So I made that decision. But in terms of someone just getting started, I would make that distinction first and then go forward from there. Does that answer it?
Yes, yes,
Okay.
and I think I'm going to add this to that. I think there's a lot of guys that want to get started into multifamily, but they want to go straight into syndications. They want to go straight into being a lead.
Right.
But until they find out and know what the true work and the amount of work, detailed work that it takes to be a syndicator in a full time, because you're pretty much you're gonna be doing a whole other job, right? And so if you have a career doing something else and you want to be a syndicator, it's not saying it's not possible. There's a lot of guys that have done that, but you just got to know that what you're getting yourself into, and know that you have other people that you have to follow up with and lead, right?
Right. So, I mean, to that point specifically, I mean, I did my first syndication when I was working a 9 to 5, and so there were a lot of early mornings, a lot of late nights. Took my sick days basically to go and travel to the asset, and so I definitely made sacrifices, but I was able to do it. And but it did take a lot of time, and like you said, it's another job. And I'm not trying to say or try to scare people into being a lead, because I think being a lead is very rewarding. It's a great method of earning income for doing the work. But one thing I just want to back up to and say is that the work, and I said there is a lot of work required. It's true, because you could be a lead and close on a deal or find a deal, and I mean, not ethically, but you could go and for not that much work, you could probably close on a deal. But I'd be super scared to be a passive in that deal because not the requisite amount of due diligence was done. But if you want to be a responsible lead, like I believe me and my partners are, and do the requisite due diligence to make sure that the opportunity is valid and is a good opportunity, then yeah, it's going to take a lot of work, because there's a lot of fact finding and investigation that just needs to be done. There's just no two ways about it. And unfortunately, there doesn't seem to be a sleek, automated way of doing a lot of this fact finding. It's just kind of a lot of verifying documents and due diligence investigations, third-party reports. It's just stuff that needs to be done, and it's a grind, but it's necessary.
Yeah, it's definitely rewarding, like you said, but it is going to take a lot of work. So it might be easier for you to get started as a passive investor and to kind of learn it a little bit, and then and kind of take it from there if that's something that you're willing to do. But like I said, it's definitely rewarding, but it's going to be a grind. It's going to be a grind, definitely. Patrick, what is one key tool, source, or platform that you would recommend other investors that use on a daily basis or consistently?
Yeah, so I was thinking about that question, and I got to say that I use Docusign. It's not real estate related, so to speak. It's kind of innocuous, but Docusign, I got to say, is a tool that I use every day. And if you're if you're a lead, or you're just in your own life and you have documents that you need to sign, Docusign is just a phenomenal tool that I find myself using constantly. That has been huge for me. I'm not that, and Dropbox, I should say Dropbox is huge for me as well. I know that's probably something everyone has experience with, but Dropbox and Docusign are pretty much indispensable business tools that I just couldn't do without.
Got it. Is there a book that you have read that you could recommend to others that has maybe changed your life, or that's just a good read?
Yeah, I really, and one just came up to me, but Dave Lindahl's book of Emerging Real Estate Markets is a really fantastic read. I like that a lot. I think it gives a good perspective on value creation and really where you want to position yourself in terms of the assets that you seek, and just an investment philosophy, because I think it has some trickle-down effects as to the benefits that can be provided your investors. So I like that. But what I would say is that the first kind of real estate book that got me and really kind of got me bought in a bit was called The Real Estate Game by William Porvu. And you don't really hear that title a lot, but he was one of my professors at Harvard, and he is a expert when it comes to real estate investing, and is one of the co-founders of Baupost, which is one of the top hedge funds in the world. And so clearly the guy knows something, and it's just a great book. I think it is kind of like a fundamental, it's not multifamily specific, but just in terms of a really nice real estate kind of reference manual, so to speak. I think just philosophically it's great. And then just lastly, what I should say, which was really, I mean, it kind of snuck up on me, but I loved it. And I still reference it as one thing that really kind of got me into the game and taking action was Jake and Gino's Wheelbarrow Profits. I love that book. I think it's just a phenomenal book, and I love their story and how they got into it. And I've had the opportunity and fortune of speaking with them a couple times, trying to get some transactions done. And they're just great guys, and I think their book is phenomenal.
Yeah, I've read that book as well, and I think it's a great read. The other one that you mentioned, you said The Real Estate Game. Is that the title of it? You said
The Real Estate Game. Mm-hmm.
Okay, that's one book I would love to check out, and hopefully you guys listening can also check it out, because definitely, that's it'd be awesome to learn just the fundamentals on that side of it.
Yeah.
Where at the end of your life, how do you want to be remembered?
I'd love to be remembered professionally as someone that always did what they said they were going to do. Always someone that acted with integrity and was honest with people. I never want to be seen as a bait and switch type of salesman or dishonest or lacking in integrity in any way. I just want to be seen as someone that says what they can do and then execute on it. Personally, I'd love to be seen as someone that was giving up their time and efforts in helping those less fortunate. And luckily in my life today, I'm able to do some service work on a daily basis with folks that are struggling personally and emotionally, and give to them and share with them lessons from my own struggles in my past that I've been able to live a better life. And so luckily I'm able to deliver on that service message today, every day. But personally, that's how I would like to be seen as well.
Got it. Great answer. Great answer. Where can Commit to Wealth Nation go to contact you and find out more about you?
Sure. So I'm pretty giving of my time. So if people want to just shoot me an email, I'm happy to get on a call with them and answer any questions they have. My email to reach me is P as in Patrick, DUFFY, the number 3, the number 2 at gmail.com. So that's pduffy32 at gmail.com. They can just shoot me an email and I'd be happy to answer their questions. Got
it. So guys, definitely reach out to him. He is a great guy and definitely knows what he's talking about. So definitely reach out to him if you want to invest passively, or if you want to reach out to him to, you want to help, you need help to analyze that deal. Like I said, he knows what he's doing. And so he'll definitely be able to help you guys out. Patrick, it was an honor. It was an honor to have you here on the show. It was great to have you share your story and your information, and I wish you the best. Thanks a lot, Juan. It was a pleasure and a privilege. Thank you so much for having me. Yeah, thank you.